Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange, and you're joining us here on Friday, October 8th, 2021 for another market recap. I'm joined by my co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, glad to be here.
It was a really, really big week, Bruce. We have a lot to talk about. You have a lot of explaining to do.
Or the market does.
Or the market does, or yeah, right. I won't put this on you. Okay, so there's a bunch that we're going to break down today. We're going to talk about both Canadian and U.S. employment numbers came out. There was some effects from both of them. You're going to tell us about that. We're going to talk about the U.S. Senate voted to extend the debt ceiling in the U.S. by a mere $480 billion. We're going to talk about oil prices. Oil reached $80 a barrel, which is the highest since 2014. We're going to talk about interest rates. They are on the rise, I believe, due to inflation. You're going to explain that and why that happened. And then we're going to talk about one thing that I think everybody in the world probably knows. There was a shutdown of Facebook, Instagram, and WhatsApp for 6 whole hours on Monday. I don't know how any of us got by, but we did. We're still here to tell the story. As well, a whistleblower on Tuesday sat in front of a key subcommittee talking about some issues that she has witnessed at Facebook. So we're going to talk about that. And then, of course, we'll end off with some wonderful CSE issuer news. So let's jump right into it, Bruce. What happened with employment rates?
Well, we had employment numbers released in Canada today and in the U.S., and the U.S. numbers were fairly significantly below expectation. The expectation was about 500,000 jobs created, and there was only 194,000. Now, the interesting part is in Canada, which we're roughly a tenth the size of the U.S., there was 157,000 jobs created. So we did a much better job of getting people back to work. And, maybe perhaps that's a function of, where we are nationally from a vaccination standpoint versus the US. Their numbers have started to drop a bit with the Delta surge, but certainly, that could be one of the factors towards that.
Absolutely. I mean, that's one thing I do have to say about Canada is our healthcare system. I think we've done a pretty good job from a global perspective on vaccination numbers. So I do have faith in Canada when it comes to that healthcare system that we have in place. Okay, let's talk about the vote that went through Senate today. It has not been signed off by Biden yet, but it did get voted. The vote was 48-50, so a very tight vote to extend the debt ceiling. I think this occurred because there is a period of time coming up in the future where the U.S. debt didn't have the ability to pay certain debt expirations that were coming up, which was the reason for this. So tell us about this.
Yeah, I mean, the big news that, it's obviously had an impact on the markets over the last couple of weeks as, investors have become concerned about whether or not that would be extended or, what that would mean. And, it's just uncertainty. Investors don't like that. The markets were volatile this week. And, part of that could be on the back of this debt ceiling, both when there was concerns that it might not get done. And then when the rumors came out that they had what they felt was the deal, the market had a fairly strong move up intraday that day. And then obviously it's inched its way higher as we've got closer to signing the deal.
Well, I guess they didn't really have a choice. This definitely is a good opportunity for the Democrats and Republicans to battle it out in the media. So we're watching that play out as well. Okay, oil. What happened with oil? It's highest $80 a barrel since 2014. What's going on?
Yeah, we haven't seen this level of oil in quite some time. And really, we have seen demand pick up from where it was, say, a year ago or a year and a half ago, right in the middle of the pandemic when oil prices actually went negative, where it cost you money to hold oil. So people were selling it at a negative price to now where it's up at $80 a barrel, which is the highest level, as you mentioned, from 2014. But what we've really seen is the demand has picked up, but it's not significant. But what we've seen is that the supply has stayed fairly steady. A lot of the producers that are out there haven't decided to pump. OPEC's kept their numbers where, they said they were, and there must not be much cheating going on there. And so, there really isn't this huge glut of oil that you would have expected, given that we were at $80. Does that change in the future? Probably does. But at the same time, we could also see a fairly significant uptake in demand if after Delta we manage to really start to see the end of COVID, and we see return back to industry and transportation and travel. That would certainly have an impact on oil, and it could push even higher.
So we talked about this. I can't remember how long ago it was, but it was in the summer, and OPEC came out and they had discussed, they obviously are involved in creating supply and demand when it comes to oil. And there's different countries that are involved. Would you say that this is a success for how they implement, their restrictions? This creates a success because oil prices go up. Is this what their intent was?
Yeah, for sure. I mean, they take a look and, they've got obviously this resource that's in the ground, and they're trying to maximize the amount of value that they get for that resource. And, it's a fine line between, pumping it out today or holding it for higher prices down the road. And when they're able to hold the line on production and the price rises, then obviously it makes what they have left in the ground more valuable. And also the current production means more cash flow to them as well.
Interesting. Okay, interest rates are on the rise. We've kind of been waiting for this to happen for quite some time. Talk to us about that. I know it obviously is usually a counterpoint to inflation. So what happened?
Yeah, that's exactly it. Has been a counterpoint to inflation. And if you kind of watch what's happened with rates this year, moving into sort of the January, February timeframe, we started to see rates move up as, we came through at that point in time, what was the, sort of current round of COVID. We weren't really talking Delta at that point in time, but it was the current round of COVID. We started to see some acceleration, people getting back to work. And then, as the summer came or started to approach, that's when Delta showed up on the radar. Delta started to have an impact, and we saw slowing down the economy. You saw rates at that point in time start to drop. Well, now we're starting to see Delta numbers peak, and at the same time, you're seeing inflation continue to be very strong. If you look at commodities, doesn't matter what it is, from oil to cotton, the commodity prices continue to rise. And I think all of us feel that every day with what we buy in the stores. At one point in time, people said, oh, there's no inflation, or there's, inflation's kind of muted, and now that really isn't the case, right? It doesn't matter where you turn. And quite often, because of the supply chain, we're not able to get products. And then even the products that we can get are often higher. And that's a lot of staples. I mean, if it's groceries, if it's, rent, if it's clothes, it seems like everything is certainly taken an increase in price.
So listen, people don't like the cost of their money being more. So they don't necessarily want to pay more interest for the cost of the money that they use. But would you say this is a good thing to help, ease the inflation back a bit? Is this essentially a good thing for interest rates to rise?
Well, as rates start to rise, I mean, that obviously has an impact on borrowing costs for companies and for individuals. And so as a result, they tend to cut back on the amount of borrowing that they would do, which is less money supply in the economy, which tends to slow things down. I mean, this is exactly how central banks try to control the economy by, as things get hot or inflation gets high, they start to increase interest rates, cut back their, fiscal programs or their monetary programs. And then what you see is that, you start to see this hopefully slow decrease in the economic activity until it eventually gets to that stall point and we head into a recession. And at that point in time, central bankers decrease interest rates, trying to stimulate the economy again. And so, we're just on the front half of that right now, where they're starting to increase interest rates with the hope of trying to control inflation, but at the same time, keep the economy growing.
Okay, I'm putting you on the spot here, but just for those of you that weren't aware of what was going on in the early 80s, depending on your age. So in the early 80s, we had interest rates over 18% level. Literally to go and buy a house, your mortgage would be 18 or 19%. Was that a similar thing, that inflation had just gone through the roof and it was their continuous attempt to try and bring it back? Is that what happened?
Yeah, that's exactly what happened. They were trying to basically break the back of inflation. And so they were trying to, slow things down. And obviously rates got significantly higher. If we were to see those type of rates today, it would be almost, I would suggest catastrophic because of the amount of money that's been borrowed, both from an individual and corporate side and from a government standpoint as well. So, yeah, that was exactly what they were doing back in the 80s. And then, following that period where once they got inflation under control, we really saw, a sort of 30 or 40-year move in interest rates coming down. Are we at the point now where they're going to make a dramatic move up? That's only time will tell whether or not that's the case. But certainly they bumped off the bottom that we saw, kind of a year and a half ago.
Interesting. Well, hopefully we don't see those levels again, but we definitely hope that we can keep a little bit of inflation at bay. So as you mentioned last week, bay can be more reasonable. Okay, let's talk about what happened this week with Facebook. So Facebook, Instagram, and WhatsApp are all owned by Facebook. And there was, it shut down for 6 hours on Monday. There's a lot of conspiracy theories going on around this shutdown. They came out and just said, look, this was a technical issue that we had. Someone related to like a Christmas string of lights. Again, I'm probably dating myself because that doesn't happen anymore, where if one was out, the whole string would go out. And that's kind of how they relate it to what their technical issues. So that went down on Monday for 6 hours. I didn't realize this, but obviously it's an annoyance for people who want to utilize the social media platform. But what I didn't realize is there's a lot of companies out there globally that rely on these as their communication, as the way they run their business. This actually shut down businesses for 6 hours, which was pretty hard on them. On Tuesday, a whistleblower who was an ex-Facebook employee also went in front of a subcommittee, a key Senate subcommittee, to discuss the fact that she feels and feels she has proof that Facebook is choosing profit and growth over safety, and specifically referring to kind of fake news and so on. Tell us about this.
Yeah, I mean, obviously there's a lot to look at there. Facebook being one of the, kind of leaders of technology, obviously has a big impact on the markets and the direction of the markets, especially, when you look at sort of the NASDAQ and its impact on technology stocks. So that's obviously from a market standpoint, something to watch. The thing that I found quite interesting was when you sort of dig into these whistleblower programs and what the potential fines are, and then also what the potential rewards for being a whistleblower are, it's significant. So, if you just look at the average, or not the average, but the range of what a reward can be, it can be 10 to 30% of the overall fine. And so, if you talked about, Facebook, say they get a $10 billion fine, which wouldn't be out of the question, then the whistleblower could theoretically get $1 billion from this. So, the numbers are huge as far as just that aspect. Everyone would say, "Oh, wow, 10 billion for Facebook, that's a big penalty." But then you think, well, the whistleblower gets 10% of that. I'm sure they won't, pay to that degree. But when you just look at the pure numbers, like this person that is doing this has, certainly some financial incentive.
I guess money keeps people honest. Okay, so to talk about the market side of this, Facebook stock had a rough week, we'll put it that way. 10.6 million problems were reported during this outage, just going back to the outage, which is the most in history. I mean, it just shows how much this is being used globally, these platforms. The shares at one point dropped 5%. It is estimated that is a value of $6 billion in personally Mark Zuckerberg's wealth. So that's a huge drop for him. The estimated lost revenues, which we will continue to discover, they're estimated at more than 60 million for this 6 hour shutdown of it. I think the one thing that's really important, Bruce, and I'm asking you this because obviously what you do for a living is research and compiling information so that you can make educated, decisions for your clients. A big part of this is this discussion around fake news and around these platforms having this intense ability to relay whatever information gets put on there. But don't we also have a responsibility to ensure that we're getting information from credible sources and that we're taking with a grain of salt as we enter in these social media platforms? I mean, how do you decide what's credible when you're doing your research?
Yeah, I mean, obviously, you have to take some of this information with, a big grain of salt. Obviously, when we do our research, we're looking for, company filings where, they're held to a higher standard than, just somebody posting something on social media. The social media, and what kind of floats around on the web that isn't official press releases or official news that's been vetted by a securities commissioner, or could be, we will look at that, but certainly, we have to always try to consider what the source is, and not only what the source is, but what their side is. There's lots of information. You see this often with, reports both on the long side and the short side. They're trying to manipulate the stock to their advantage in a lot of cases. So, we have to be careful with stuff like that. Obviously, in this case, it's a lot bigger issue. This, revolves around, Facebook and trying to get, viewers and engagement by, pushing the envelope on, kind of what's ethical according to the whistleblower. So it's a totally different topic.
Yeah, I mean, let's not forget it wasn't that long ago that Twitter and Donald Trump, they had it out, and they said, we feel that you're fear mongering, and you're creating a movement just by putting your thoughts out there. It's an interesting world we live in, and we make our own choices. So get news where you think it's credible, and try and think smartly about that type of thing. Okay, let's talk about CSC Issuer News, my favorite part of the segment. We had a new company come to trade today that I wanted to talk about, but I'm especially excited for them because we have an investment issuer, which we've talked about before, called Eat Beyond on the CSC. And an investment issuer is typically a company where their business model is to invest in other companies. These are kind of interesting moves, I think, when we see emerging sectors come to the market, because if you get a really good professional management team, it gives you the opportunity to invest, and all they do all day long is do their due diligence and take capital and invest in companies in emerging sectors. The benefit is that if they do their job right, some of these companies become so big and they grow so fast that they're ready to stand on their own, which is exactly what happened this week. So Eat Beyond, one of their portfolio companies, Nabati Foods, became a standalone issuer. So welcome, Nabati Foods. We're excited to have you guys. They are a food technology company. They're based out of Alberta, in Edmonton. And in March of 2021, these guys went to go raise $4 million. Eat Beyond is obviously invested in them, as I'm not sure what their participation in that particular raise was. And they literally had thousands of inquiries to invest in that private placement. They oversubscribed that placement from 4 million to 7.7 million, and now are standing out there on their own. So congratulations to those guys. Yet another plant-based protein, soy, vegan, non-GMO, everything that that is out there. So they've done a great job. I think they're currently using those funds to branch out into the US and 300 stores across Canada, and that number continues growing as we speak. I know we talk about plant-based protein a lot. Bruce, have you and your team looked into this sector much?
We have. We have some investments in the sector because, obviously it's from a consumer trend standpoint, it's fairly big. And, obviously if there's strong consumer trends, that can translate into strong stock prices as well.
Absolutely. Well, and it's a great business model. I mean, it's revenue generating. It's really well liked by the markets. Investors who use the food product like to invest in the company. So I think it's a really neat sector. I will just mention that we had a busy week at the CSC. We had on Monday and Tuesday of this week, we did a 2-part ESG series. As well on Wednesday, we did digital securities in the capital markets. All of that video can be found on CSC TV, on our YouTube page. If you hit subscribe, we'll make sure that we let you know when content comes to market, as well as our wonderful Friday get together. Bruce, what should we think about going into next week other than a bunch of turkey?
Well, yeah, beyond the turkey hangover, what we'll be looking for is we're really getting close to that end of the seasonality, the week seasonality period now. So we should start to actually see markets pick up here a bit. And then on sort of on the backs of that, probably what can drive that is economic reports. You're going to see a number of companies start to report their Q3 earnings, and we're looking for the guidance. The numbers probably will be a little bit softer. We're looking for the guidance on what they see coming into the fourth quarter.
Sounds great. Well, have a wonderful long weekend. Enjoy your family, feast, eat well, and I look forward to seeing you next week.
Yeah, happy Thanksgiving.
Happy Thanksgiving.